Welcome to the Overberg Asset Management Market Review. In this episode, Carl and Gilly shares with us the highlights of the markets, both globally and in South Africa. If you find this video helpful, please press the like button and don't forget to subscribe to see our upcoming market reviews.
Good day, I'm Carl Lecoq, COO and Director at Overberg Asset Management, based in the Hermanus office. Today we are looking at the recent developments in the East and how it could impact the global markets. Welcome. All right, so I think at this point, any discussion not involving the conflict in Ukraine would not really be a proper discussion about the world market. So I just want to sort of touch on a few things there. So obviously everybody's kind of been probably following what's going on in Ukraine and kind of following the developments there. But I think it's quite important to also know how that affects the markets. But first of all, why is Ukraine important? We received some nice stats from PSG that puts all of that into perspective, which I'm going to share with you on screen now. And we'll quickly run through that. So there's quite a few facts in here, but in terms of population, there's about 40 million people in Ukraine, and as a country, they're bigger than Poland. In terms of country size, it's the second largest in Europe, just after Russia. And then also, I didn't know all of these, but next on the list there would be France, Spain, Sweden, and then Germany. So in terms of minerals and mining, you can see all the rankings here. So manganese, iron ore, iron exports, uranium, all ranked first in Europe and then second and third in the world. Titanium second in Europe, 10th in the world. Exports, it's the fourth largest exporter in the world in terms of titanium. Mercury ores, the second largest in Europe. Shale gas reserves, the third largest in Europe, 13th largest in the world. And then coal reserves, it's the seventh largest in the world. So in terms of total natural resources, it's ranked fourth in the world. So it's quite an important natural resources producer and exporter. Then in terms of food production, agriculture, it has the biggest arable land area in Europe. Black soil is ranked third in the world, so it contains 25% of all of the world's volume of black soil. It's the top producer of sunflower and sunflower oil exports. For those beer drinkers, production of barley is second largest in the world, fourth largest exporter. Corn production third in the world and fourth largest exporter. And then you can see potatoes, rye, beef production, wheat, chicken eggs, and cheese, 16th there. Overall, Ukraine could feed 600 million people. It's quite an industrialized country. So in terms of producing ammonia, it's the largest producer in Europe. Its natural gas pipeline system is second largest in Europe and fourth largest in the world. Installed capacity in terms of nuclear power plants, it's the third largest in Europe and the eighth largest in the world. Its rail network length, third in Europe, 11th in the world. And then there's a few niche sort of markets, locators, locating equipment, turbines for nuclear power plants, fourth largest. Rocket launcher manufacturing, it's the fourth largest in the world, and probably explains why they've been able to hold off the Russian advances in the last few days. As you can see from this table, there's many reasons why Russia would want Ukraine to be a part of Russia, but it's also got, the conflict has also got an impact on the production and exports of a lot of these resources. The first sanctions, that was really only just a slap on the wrist. There's been much more crippling sanctions that followed. which has effectively frozen most of Russia's financial markets. So the Russian central bank, has been shut out of accessing foreign reserves. They've had to double their interest rate from 9.5% to 20% to try and protect the ruble. Some Russian banks have been kicked off SWIFT. So for those that don't know, SWIFT is the messaging system, international messaging system that banks use to talk to each other. And being kicked off SWIFT means that effectively you can't receive or make payments to international banks. So really sort of cutting Russian banks off the international payment system. That's kind of led Russians to start withdrawing funds from ATMs, lining up. It's also spurred a recovery in Bitcoin. So the thought behind that is that lots of Russians is piling into Bitcoin to try and protect, the value of their assets. So we've seen Bitcoin actually rising by 16% in the last 5 days. Russia's energy sector was spared. Russia exports a lot of gas to Europe. The sanctions were tailored not to include those energy sectors. And they say that that could provide some relief for Russia's foreign reserves and, to some degree would protect the payments in Russia. A lot of the oil companies, ExxonMobil has recently announced that they're going to divest from Russia. So I think the Russian oil exploration and investment will obviously take a massive hit, which could have a long-term impact on oil. Russia faces economic recession and there's a high risk of financial crisis, and that will obviously have quite a strain on Russian banks, with potential spillover into European banks that have exposure to Russia. We've seen actually in the last week that quite a few European banks have taken quite a knock in their share price. From Capital Economics, they wrote an analysis a couple of days ago, and in that piece they note that bond yields haven't really fallen as much as they thought. And the reason for this is that short-term inflation expectations have risen because of that disruptions of commodities. And they say this is despite a risk-off event. So they see that in the short term, there's probably going to be more pressure on inflation, and they see an unlikely scenario that equities will rebound. Their view is that equities haven't really fallen as much since the outbreak of war, and they compare this to the Iraq-Kuwait war of 1991, where equity indices fell between 20 and 25%. So their view is there's going to be a period of poor performance from equity, and they see inflation being higher for longer, which would then also mean that central banks will have tighter policy measures, which will obviously throttle economic growth. The other implication is that they see the long end of the yield curve rising because of the inflation, and that obviously has an impact on the US tech sector with those long period discounts. We've certainly seen some of those tech stocks also taking a bit of a hit in the last week. Then just an observation or newsletter that I read this morning from Robert Armstrong, writing for the Financial Times. It was written after Capital Economics report, and in that newsletter he notes that bond markets have actually priced in a recession in Europe. So he's observed bond yields, sovereign bond yields, especially in UK and in Germany, has actually fallen in the last couple of days, implying that EU policy rates for 2022 might not move. And that's in contrast with, a few weeks ago where markets were actually pricing in that they would move higher. So he's observed the 10-year yields on UK and German sovereign bonds. In the UK, they've fallen by 21 basis points in the last few days, and in Germany by 28 basis points. And they see that as a bet on the slowing economy and also demand for safe haven assets over the longer term. That's it from me. I hope that gave you guys a bit of an insight on the impact of the conflict in Ukraine. Over to Gilly.
Hi, Carl. Thank you very much. That was an excellent overview of the situation in the Ukraine or in Ukraine. On the local side is ABI. We own ABI. Alan Gray clients, they now own 10% of the total issued share issues of ABI, so they've upped their stake from about 5% to 10%. And then also ABI, FNB, First National Bank, they say that ABI is a preferred share in that sector. Discount pharmacies, they advise shareholders that the PIC, the Public Investment Corporation, increase their shareholding in the company from 5% to 10%. STADIO brought out figures for their year. They've got a calendar year as their financial year, the normal school year. And their headline earnings per share will be up between 20% and 35%. Not final yet. Final will be out soon. But when it's up, when they expect it to be up with more than 20%, they must report on that. The City Lodge, they also had good figures. Their year is also a calendar year. No, sorry, it's not a calendar year, it's a half-year figures, these. They had a loss for the year of 5 cents per share. That compares with the loss of the previous year of 127 cents per share. So that's a massive improvement of more than 100% at City Lodge. You must remember that the hotels are very capital intensive. They very much like the mine. And when they get new income, it goes straight to the bottom line. They don't have a lot of variable expenses. Motus Holdings, we own Motus Holdings. They released results for the half year till the end of December. And the headline earnings increased with 51%. The Grindrod, they expect the headline earnings per share to be about 90 cents or 94 cents as compared with the loss of the previous year of 24 cents. So that's a massive improvement there. First Rand, they published a trading statement for the 6 months to the end of December. And their normalized earnings per share is expected to be between 40 and 45% up. Very positive. AB InBev, their financial year is calendar year, and they expect their earnings to rise with 50%. Anglo American, they also use a calendar year as their financial year, and their headlines earnings is up for last year for 21 with no less than 183%. They will declare a nice dividend, and adding to that, they will also be declaring a special dividend. The foreign buying and selling of shares on the JSE has turned around from last year's losses. I don't know, it must be about the 13th week of the month now, and at the moment, the net buying of foreigners is 13 billion rand for the year. That's massive. It's really something good. Black swans, there's only one black swan, and that is a war that Karel talked about. And we've got two companies trading in Russia and in Ukraine. It's Mondi and Barlow World. And Mondi's prices dropped a lot, and so did Barlow World. That's all for those companies. Then I just want to give a few figures. The car sales are out for February, and the car sales are up The local sales are up with 18%, 18%, and exports are up with 12%. It's very good. Toyota, they're the top seller at the moment, 13,000 cars. Motus is second with 7,000, and Volkswagen third with 6,000 cars. Bentleys, 3 Bentleys were sold for the month, 6 Ferraris were sold, 6 Lamborghinis were sold, and no less than 154 Porsche cars were sold for the month.
All right. Thank you, Gilly. Thanks for that. Good stuff. All right. Well, let's end it there. I hope everybody has a good week.